Good morning, folks. Hope you're doing well. It's Ivan Trace again. Today we are on Sunday, and I just wanted to make a brief trade recap of the past week. So there was not much happening. What happened essentially? Look at this distance. That's what I'm looking at right now. This G field seems to have no end at all. I've been running here non-stop, but yeah, it doesn't end. I don't know why. So really, this week I did not do much. I was kind of busy with the other stuff, and I did not trade as much as I used to. I trade like 2 trades, which were a loss so far. If you remember, where in my most recent Sunday recap, I set 2 objectives. Maybe there are 3 to use set and forget, as well as trying not to add too many fidgeting with my stops or my targets or my trades overall, to see what will end up happening. So far, I don't think you can measure the success rate of something in a data set of 2 trades, which I will make a recap on soon, but at least it gives you an ease of mind knowing that you did do what you were supposed to do, and there was not much of the loss, which was because of your impulsiveness. Yeah, I think that's the key. And also measuring your KPIs based on the really tangible enough data set is crucial. So let me go through the trades which I took last week. It's the 3rd week of the month of May 2025, and then I will see the setups which I missed out on, and if I could have taken them or not. So let's hope to our lovely up trading view. Let me minimize this one. I think I only traded on Tuesday and Wednesday, and looking back, I only traded the euro and euro. Yeah, both were short setups and both failed, if I remember very well. Okay, I failed. Let's not mistake in this. Yeah, so far both were in the London session, and as I told you, I've been very busy, that I feel pressured to take trades in London session, which is usually not my best kill zone, and I end up doing being stopped out in New York, which I really am not a fan of, but the impulsiveness of taking trades just stays stronger. I don't know why. So, looking back at the first trade of the week, let's go back a little bit. No, the first one was a long one, and you'll see the similarities on these trades because both of them were losers, and I kind of had a lot of recency bias. So the first was on Tuesday, and on the high time frame, if you can pull up let's see if this one is PUSD. If you can see, so far we had an open high Monday. As you can see, the week opened straight up. There was no week whatsoever on both of the asset classes, and we swinged for the previous week's high, which was this one, I guess. We instantly ran the previous week's high. So far, I knew that even though the all of this move happened in the edge, most of it happened in the Asia, as you can see. And then, is it Asia or I'm lying to you? No, most of it came in London session, and I did not get an entry. That is why I didn't trade on Monday. And Tuesday was guaranteed to be a consolidation due to this impulse move to the upside, sweeping a key liquidity area, which is previous week's high. And don't forget that there was a divergence on these lows right here on the euro and the GBP. So this move could be anticipated. So far, I knew that Tuesday could be a consolidation, but also could provide a move out of this consolidation to the buy side still. And when the price came off inside of this, you can see that we were in the weekly VC. Then let me scroll this real quick. You could see this sharp turn which ended up happening after we swept the previous week's high right here. The price wicked above and closed the side of the range, and displaced inside of the range, started to consolidate. And when we came into the late London, I want to go through it as quickly as possible. The trade was here. You could see that there was an SMA right here. Price started this market maker inside of these consecutive hourly BCs, and the terminus was this high right here. I do not know exactly why the price reversed at this moment, but if we go to the lower time frames, we can see because there was just low resistance liquidity over there. There was nothing to react off of. But considering that Monday was a big spike to the upside, we could expect some kind of range. And when we started to displace towards the buy side right here, I thought price was going in a buy program yet again. But because we were when the 5 a.m. candle opened, I wanna annotate it open Yeah, it opened right here. Let me think it. Where is that magnet sheet? Yeah, on the 5 minute you can see the 5 a.m. The price kind of swept this sell side right here. If you can see closely, swept these lows which were right here, but did not manage to reach them on the GBP/USD. If you can see to the chart below, because the market just swept all of these lows. There was an uncertainty right here. So when the price swept these lows, I was anticipating the 5 a.m. to open low, but it indeed did not do that. Instead, what it did was it opened high. This is kind of the same mistakes. Whenever I see the high time frame candle open in my direction, that means I'm wrong, because I'm anticipating a higher time frame accumulation and manipulation and distribution. So far, the 5 a.m. opened high on both asset classes and formed a slight small SMT on these highs right here, and this could have been enough alert for me to get out of these trades which I was in, because that was a sign that maybe the high of the London session was in, because after that the price gyrated with speed to the downside until New York opened down there. So that should have been an enough confirmations for me to get out of this trade, because this was a validation of this high time frame market maker sell model, intermediate term market maker sell model, which ended up reaching these lows right here on the GBP/USD. So this was a full loss, and the reason was that I ignored these signs, and I hoped that the price could go back in my direction. You know how you see when you're in drawdown and the price starts to direct back into profit, it begins to be hopeful. That happened to me on Tuesday, and this one was the trade of Tuesday. Let's go and on the day after. As I showed you in the last week, I tend to carry the trades which I took into the next day, which is not what. Maybe it's because I'm looking at the trades which I took on, and have a recency bias, but that shouldn't be the case at all, because recency bias kills. So these trades were kinda the same exactly. It was just ignoring the signs that the order for might be changing after the open of high time frame candles. So I do not know why my mistakes are coming off of these tiny mistakes. I think that I'm following the trend, but in retrospect, I'm just forcing my will on the trade because I see all the negative signs on the lower time frame that the order flow is against my bias, and I push towards it, and this is a very difficult spot to be in because two losses, all of them came off of forcing shorts or longs in the SMT made by 5 a.m. candle. So if I can zoom out a little bit, right here we on Wednesday we reached this daily OB right here. If I can zoom out, you can see this daily auto block, which is on the left side of the curve. Let me see clearly. Yeah. No, I don't think it's an OB. Yeah. This daily CB was drawn literally on Friday when I was anticipating these highs rejecting this daily CB right here. So the OB which I was looking at is this one. If you can see this candle clearly, this candle open on the euro. Yeah, if we go to the futures chart, you can see how much it retested this volume imbalance plus CB and displaced to the downside. So I was expecting some kind of high formation in it and anticipate a reverse to the downside. So going back to the euro chart, CFT chart, euro USD. Okay, this shit is kinda slow. So if you see to the hourly time frame, you can see this high formation right here. I was expecting it to hold this high which was formed. You can see a little bit of a divergence on these highs when we reached the daily CB, the hourly time frame, and I assumed that this was the high of the week. So I decided to drop on the 1 hour time frame. I considered these consecutive up close candles to be, which led up to the high formation, to be the change in state of delivery from a buy to a sell program. So that is why I dropped down to do it one time frame, 1 hour, 5 minutes, sorry. So the same mistake on the low time frame happened, and was that I forced my pro trend idea to the low time frame, even though they might have to readjust. We were in some kind of consolidation to be frank, and the price simply, even though there was this low time frame market maker sell model with this buying being the buy side, having not taken out the London and the Asian sell side right here, and having wicked out the Asian session highs and gyrating to down to the sell side of Asia. Price started consolidating in this daily VC. It was just consolidating around gyrating, so I thought this could not be a reversal because we essentially swept the highs and reversed, made a change in state of delivery, which was valid right here, and I was expecting some phase of price action to the downside, but the small invalidation was that if you look closely, this low right here, which was formed at 450, I did not get a the SMT which validated my idea to the downside. Instead, it was just the one which is against me. I should have waited because it happened on the open of high time frame candle, but I held on to it. The price started reversing against me, acted like it was pulling back, and immediately stopped me out. So it's actually the same exact trade loss, but in one in a long setup, another in a short setup. If I can take the biggest takeaway from these trades is that I actually did the same mistake. I was trying to go pro trend, but the lower time frame mistake is most of the time I enter opposite to the smart money reversal of the opposite trend, and this should be like my last mistake I will ever make, because if I can recoup all of these losses in time, I can go along with the original price action, because you can see that these trades are actually the same. I entered a little bit impulsively on these lows right here, because if the 5 a.m. Alright, let me should always enter below her time frame candle if I'm long, and above them if I'm short, and if I miss out, I should be okay with it. And yeah, the 5 a.m. actually opened right 5 a.m. opened right here, and it opened high, formed the relatively equal highs right here. It didn't make any sort of a lower time frame SMT because none of these highs were taken. So yeah, another thing is that oh my god, even there was a slight SMT right here on these low highs, but there shouldn't be any kind of other counter. My trend divergence, because that would invalid that could be setting up a mark which could take me out. So that is the best takeaway which I just took from analyzing these trades, recording it, and so far I haven't yet thought about this. So what I actually need to do is to make sure that when I get an entry, there is no counter my trend divergence, because that could be setting up a continuation instead of reversal in my bias. Damn. It's actually very funny how I traded these late setups and I learned a lot from these two trades than learning from like 5 trades. It's weird, but yeah. Yeah, right now I just realized my mistakes, and did I miss any of the trades? Let me see on the hourly. At least on Thursday was kind of, nowadays the Asian session tends to have a very rapid piece of price action, and then London and AM session just range around. I don't know why, but seems to be the case, because I missed out on this one, and the reason being it happened in the Asian session. It could have been perfect trade when it came along, when I was awake in the AM session. At least this could have been a perfect market bar model, and what I would be looking for is, after the invalidation, I shouldn't try to pick the top or the bottom because of the range, because the price can do whatever it wants. You can see how the confirmed high of the week right here on Tuesday was reswept on that same day. So that could happen even on the low. So that means I have to be dynamic in my perception of the market, because anything can happen, and that's why you shouldn't place any trade without pressing any stop, because she can turn upside down. You can be entering long when the market is essentially turning upside down. You can see a perfect setup, but the market is just going against your bias completely. So that is why you have to always be aware of where you are in the range. So this setup which I missed, which happened in the Asian session, you can see that the price displaced to the downside and swept the previous day's low right here. Is it the previous day's low? Yeah. The market on Thursday swept the low of Wednesday inside of this range right here, which GBPUSD did not. And then in the process, you can see the divergence right here. The price instantly spiked up. It spiked to the upside, displacing above. This could have been my change in state of delivery right here after retesting this. This could have been my low risk buy. If it happened in the AM session, I could have taken it and target 122. I don't know if I could have missed out. Yeah. It could have been a very quick one, but as you can see, of course, we are on the 1 hour time frame, and I don't usually trade on the 1 hour because I don't know how long the price could run, but I would drop down to the lower time frame and try to frame a setup here. As you can see, even on the 5 minute, there could be plenty of opportunities right here, because yeah, there were plenty of them. So the price reached this original consolidation. I didn't want to catch the top when the price displaced back into the range right here. I did not want to catch the top of the range and be stopped out. Price gyrated to the upside again, side of this 5 minute CB, which even on the 1 hour time frame is there, but it started ranging. Couldn't expect this much volatility all day long because the high time frame objective was already met. It was the Wednesday's high after sweeping its low, as well as the Tuesday's high. So the week ended the bullish, and that was it. Yeah, apart from the mistakes which I made, I think those were the trades which I took, and so far I look forward to see what the market will bring in the upcoming week, last week of May. The year is ending, guys. Yeah, we are approaching the end of the year. So we better take this shit seriously, because we have to be consistent with the market, and the profits will also be consistent. Yeah, I'm heading back home, and I wanted to share this with you. So far, I already made the trade recap as well as the chart uh, chart markup of the weekend. We will see what the next week provides us with. So happy trading, and I'll see you in the next one. Thank you. So Ivan trades again.